بالله من الشيطان الرجيم بسم الله الرحمن الرحيم الحمد لله رب العالمين والصلاة والسلام على سيد الأنبياء والمرسلين سيدنا ونبينا وشفيع ذنوبنا وطبيب قلوبنا أبي القاسم محمد اللهم صل على محمد وآل محمد وعلى أهل بيته الطيبين الطاهرين المعصومين أما بعد فقد قال الله تبارك في كتابه المجيد بسم الله الرحمن الرحيم واعلموا أن ما غنمتم من شيء فإن لله خمسه وللرسول ولذي القربى واليتامى والمساكين وابن السبيل. I welcome all of you to the second day of the two-day workshop on Khums, understanding Khums and trying to come up with best practices so that we can easily and correctly calculate our Khums. Yesterday we had reached a point where we talked about the simplest method of calculating Khums. So let me quickly go over that, and inshallah we'll continue from there. So one thing that we learned yesterday is that Khums becomes wajib at acquisition of income. So the moment you become the owner of khumsable income, Khums becomes wajib on that income. And one way is to either pay it right at that moment. So you can take out 1/5, which belongs to the Sahme Sadat, which belongs to the Sadat and Imam, and keep the rest for yourself. Okay. Now, the topics that are still left, and we might cover some of them, there are people who are exempt from paying Khums. There's income that is exempt from Khums. How am I going to set up my home state? All of that, inshallah, we'll discuss as on in today's session in some detail. Now, the popular method that most people use, let me go over that. But before I do that, let me see if there's something that I needed to share as well. No. Okay, we are good. So one of the popular methods that people use, but there are a few intricacies that I want to point out, is as follows. So whenever you become the owner of a faida, of a benefit, of a profit, of an income that is technically liable to Khums, as I mentioned, Khums becomes wajib on acquisition of the income. Okay. However, you can wait for a year. Okay. The Imam, so this 1/5 of that income belongs to the Imam right then and there. Okay, it's not yours to begin with. It belongs to the Imam right there and there. However, the Imam, out of his grace, has allowed you to use his money on your expenses, living expenses, for a period of 1 year. Okay, so your counter starts, and for a period of 1 year, which we call as the Khums year, you have the permission of the Imam, you have the izn of the Imam to use his money on your living expenses. Okay, and after 1 year, so all of your expenses, whether the living expenses or business expenses, you can use that from your money and his money. And once that is spent, and when the year kicks in, your time is up. Now the grace period that had been given to you to use his money is over, and at this point you are now obligated to separate and give his share and the Sadat's share to the rightful owners. So it is not that now the money belongs to them and then you have a few weeks, a few days, or a few months to hand it over to them. No, the grace period has ended. It has the deadline for taking out Khums from your wealth and giving it to the rightful owners has arrived. So there are two things. One is Khums becomes wajib on acquisition. Okay, once the Khums is wajib, it is at the time of acquisition. However, after a year, the extraction, the removal of khums from your money becomes wajib. So you have two wajibs that are at play here. One is the actual kicking in of the wujub of khums, that is at acquisition of wealth, and after a year, it becomes wajib to extract and take out khums from your money. During that 1 year period, it is not wajib to take out khums, but if you want to, you can do that. And once you take that, so after deducting the deductibles, whatever is left, 1/5 of that will be khums that will be given to the rightful owners, and the remainder is yours, which we call it as Muhammad amount, money on which khums has been taken out. So any wealth that is Muhammad's that has been subject to khums and khums has been paid on it, khums will no longer apply to it for the rest of your life and for as long as it remains. So that money is Muhammad's, and if it sits with you for 5 years, 10 years, khums will not apply on it again, as opposed to zakat, where zakat kicks in every year, even if the money is even if zakat has been paid on it last year and the money sits with you and all the conditions are met, then zakat will kick in again the next year. Sharia's ways of ensuring that your wealth is in circulation and doesn't sit with you idly. Okay, now one important thing which has a lot of consequences is that after the deadline arrives, which is the Khums year, once the deadline arrives, a couple of things happen. You're immediately prohibited from using your property, your Khumsable property. Okay. Now this is important to understand, and this has severe consequences and scary consequences. So you had $100,000 of savings, and on the deadline and on the Khums year, it becomes wajib on you. So 20% of it is Khums and the rest is Muhammad. But this joint partnership between you and the Imam and the Sadat is in the form of masha, which means that any item that you pick, if you bought 5 cars, okay, and those are over and above your need, it's not that one of the car belongs to the Imam. No, in each car the Imam owns 1/5 of each car. Okay, you cannot say this one of the car belongs to the Imam and the 4 is mine, so I can delay paying the Imam for a month and set his car aside and use the other 4 cars. No, you are prohibited from tasarruf in all Khumsable property. Okay, nothing can be done because it's joint partnership. The permission to use his wealth, his share, is over now. Okay, and just setting aside $20,000 or setting aside 1 car is not equivalent to paying it off. The tasarruf still remains intact unless you get special permission from the office. This part is really scary. So once that is over, the deadline is over, you have to give the khums, deliver the khums to the rightful owners, be their representatives or their office. Now, if you don't do that, you will be considered a ghasib. You will be considered a usurper, and rules of ghasb might apply. And one of the rules of ghasb is that person is penalized to the maximum degree. Okay, so you have an example here. So if you have stocks and on your Khums year kicks in, your Khums year deadline kicks in, and the stocks are worth 100,000, and you delay paying the khums out of negligence, you didn't take the permission, and then suddenly, so even if you remove the negligence part, so the $100,000 is the value of the stocks, khums state has kicked in, you're not paying the khums or you're delaying the khums, you'll be considered a ghasib, and suddenly the stock market crashes and the khums and the stock value drops to 20,000. If the rules of ghasb were to apply, you will be penalized to the maximum degree. The amount that you will owe will still be calculated based on the maximum value of the Khums over the entire ghasb period, which would be 100,000. So Khums will be 20,000. You will still be liable to pay 20,000, even though the stock value now is only 20,000. You will not be basing it off the current market value, but you will be basing it on the maximum value over the entire ghasb period, because you were a ghasib and you should have paid it then, and because of you, the other person has suffered. So this is scary, very scary. So you will be responsible for losses, and in certain cases also lost income. Again, a rule for ghasb. Okay, due to negligence, sometimes you're also responsible based on certain maraja. You're responsible for the lost income as well. So if the money, if you had a house and Khums rental income was coming, and there was the Khums just liable to Khums, and then you did not rent it out for 3 years or 2 years or a year or a month, so lost income you'll also be liable to compensate for lost income. And finally, putting Khums aside is not enough. I've pointed out that again. So if you have $100,000 of cash as your Khumsable income, and obviously the Khums would be 1/5 of that, which would be 20,000. If you take 20,000 aside and you put it in a separate envelope, can I now use the 80,000 that is left with me? Now, Ayatollah Sistani, this Ayatollah Sistani is ruling, may Allah prolong his life and protect him. He says this is not enough. You have not separated your share and my share. This putting it aside is not enough. You still cannot use the 80,000 until this 20,000 is delivered to the rightful owners. So these are some serious consequences. So one should be prepared. So either you pay the Khums, you do all your calculations before the deadline comes, or you can take permission from the office to have 1 or 2 weeks of cushion period where you know how to make the remaining part halal on you, the sarf in it halal on you. Okay. Inshallah, if you have any questions on this, we can address that at the end of the presentation. So there are serious implications of a joint partnership. Let me quickly let me go over it. So a person buys a house that can be rented for 50,000. So units, this is again from Pakistani currency, for example, and he buys it from his business profit. So this money, 10 million, is liable to Khums because it is from his business profit. At the end of the year, he does not pay Khums and keeps the house as a luxury house, and he does not rent it out for 5 years. So he makes an investment from his business profit that was liable to Khums. Okay, and it is rentable. The house is rentable, and now he decides to pay Khums after 5 years. Okay, the current value of the house is 50 million. So first of all, he will have to pay Khums on the current value of the house, plus delaying it for 5 years for no reason would be a haram that he has performed. And other than the haram that he has performed, for which he should do istighfar, there are other monetary obligations on him. Okay. So 20% of current value is one obligation. Compensation for losses. 10,000 per month was the rental income that was lost for 5 years. So 1/5 of that would also be paid. It needs to be paid as compensation. Okay. So this is something to be careful about when one is delaying Khums payments. It is best to take permission from the office so that you're not liable to pay to compensate for these losses and lost income. Okay, so now when the time comes to calculate your Khums, there are few criteria or few things to look for. Number one, you should have Khumsable income. Okay, your income should be Khumsable. If you have non-Khumsable income, there is no Khums. Number two, if you're using this popular method, the arrival of the home state, which is passing of 1 year. Okay. So once 1 year passes by, only then you would be required to take homes out of your wealth. Point to be noted: if a person dies during the homes year, so your homes year was January and you passed away in March, the moment you pass away in March, this is your final homes year. You have to do your homes, or your warasa have to do your homes at that point. They don't have to wait for a year. Okay, the last year would only be 3 months long. So as the moment a person dies, his home state for that year kicks in. The other criteria is that he should have leftover homesteadable money. There should be money that is left after his expenses, his living expenses, and important. Alhamdulillah, most of you already know that the deductible expenses and living expenses that you can deduct from your homes has to be in accordance with your status. Okay, that was spent based on your status. If you overspent, if you did israf, you can't deduct that extra amount that you spent as a saraf from as a deductible expense. Their homes will have to be paid on that amount. So if you're holding a majlis, and instead of food that is according to your social status, you spend very, very lavishly, and you end up spending $10,000 extra or $4,000 extra than what you should have spent, then this 4,000 extra amount that was spent will be liable to homes, even though it got spent. So the same goes with your car, same goes with your house. So any expense that is way beyond your social status, or which is beyond your social status, which is considered israf, is liable to homes, even though it gets spent. Okay, so if you can't afford a car and you buy a car that is way beyond your expense, and there's something to be careful about there. Okay. Okay, so again, this chart that I'm showing you is one of the most important charts of this presentation. So your wealth is divided into two parts: the non-homesteadable income and homesteadable income. Non-homesteadable income, nothing applies to it, and in case of homesteadable income, the procedure is the same as I mentioned before. So in a nutshell, there's 6 steps to complete your homes calculation. Number 1, figuring out your home state. Now this is important. How are you going to figure out your home state? We're going to discuss that in the next slide. Figuring out your homesteadable income, okay, or your asset value, which is homesteadable. Okay, yesterday a brother asked a question, made a comment that it seems that it is our net asset that is that will be the change in the net asset that is going to be liable to homes. And in a way it is right, but it's not precise, because it is possible that your net asset might stay the same, because or it might increase, but there would be income that is coming in that is non-homesteadable. For example, you have inherited wealth from your family members, for parents, for example, and as a result your net asset has changed, but because that change is not homesteadable, there is no homes to be paid or taken out. Then you figure out your deductibles. There are loans, there are losses, there are expenses. All of these are deductibles that can be taken out. Loans, there's a full section on loans, of how you're going to so investments made using loans. So you use your loan, you take mortgage to buy a house, and so you have paid only 20% of it, and all of the rest is bought from loan to money. How are you going to calculate your homes at the end of the year? Because the loans are, and then every year you pay part of the loan, and you're paying back part of the loan. So every year the rulings particular to loans would kick in, and homes would kick in, that you need to know, and each of these topics need an individual full session to discuss the rulings. Then figuring out your homesteadable remainder, and then you calculate your homes. and paying your Khums partner for unactualized gains due to negligence. So these are 6 steps to keep in mind when you are calculating your Khums. Now, setting your Khums here, this is again something really important, and inshallah, I'm hoping that most of you know that, but there will always be a group of people, a small group that would not be aware of this. You can set up your Khums date based on your income type. Okay, I'm using these terms. I've coined these terms to make it easier for us to understand. So you're either type U or type E or type EU. Okay, well, EU doesn't stand for the European Union. Uh, these are acronyms for something else. So type U is your type U if you don't have a profession or a skill set that you live on. And this is important. Once you understand this, you will be able to realize why in yesterday's first slide, that person, the pensioner, didn't have to pay any Khums. Okay, and some of you had that question. So type U is when you don't have a profession or a skill set that you live on, or you have a profession or skill set, but it doesn't generate a considerable portion of your living expense. Okay, so if you're retired, okay, uh, or or you're a photographer, but it generates very 5%, 6%, 1%, 3% of your living expense, and your living expense is covered by some other means, such as your pension or charity or support from your children and so on and so forth. So you would be type U in that case. So students, for example, pensioners, jobless people, people who live in welfare aid will all fall in this category. Now, type E is where you're employed. Okay, you have a profession or a skill set that you live on. So it will be, examples would be businesswomen, businessmen, employees, salaried people, workers. Even rental income falls in this category. So if you have rental income, you'll be type E. Okay. And even if you have multiple professions and collectively they generate considerable income, and even each generates a considerable portion of your living expense, you will fall in this category. For example, you are an employee and you also have rental income, so you fall in type E. And then you have type EU, where you have both. You are receiving pension, for example, and then you have rental income as well. You're receiving pension, and then you set up your own shop as well. Okay, and each of the two generates considerable portion of your expenses. They generate considerable portion of your expenses. Okay, so you have to identify yourself where you fall, and that will determine how you're going to set up your Khums here. So if you're type U, you have a choice. Okay, you can either pick one Khums year, as most people do, one date as your Khums date, and then based on that you can calculate your Khums, or every income that comes to you will have its own Khums year. So if you receive $2,000 as a pension or as gift from your son, for example, then that is the start of your Khums date for that $2,000. And if you end up using that $2,000 before a year has passed on that amount, there is no Khums on it. So you will have multiple deadlines for each income that reaches you, and your deadline will be 1 year. So you'll have multiple timers. So the first month you receive something, you can have a separate drawer, and you put that in that drawer, and mark a deadline of 1 year. And if you use it before 1 year ends, there's no Khums on that property. The next month you receive another source of income. You have another income from pension or from your second son, and then if you end up using that before the year ends, then there is no Khums on that as well, and so on, so forth. Okay. If you are type E, then you have one homestead, the date when you start working. Okay, there's no choice. But if you're type E and you have multiple professions and skill sets, then again you have a choice between one homestead, or you can have every profession will have its own homes year. Okay, so you can split it between your businesses. You can have separate homes years for your separate businesses, for example, and then, or you can lump them together and just set up one homestead. How are you comfortable? You have a choice there. And if you're a pensioner who runs a shop, then your ruling would be the same as type E, part A, where you have one homestead, the date when you started work. That is when your homestead will start, your home year will start. So now this is important. Okay. Now I would use this time to go back and show why the pensioner had no homes obligation in a moment. But make if you look at this slide, you will realize that keeping one homestead is compatible with all income types. Okay. So if you have one homestead, you're compatible with all income types, even though in certain cases, you might end up paying more, taking out more homes, paying more homes. Okay. So let us yeah, so let me just very quickly go back to that slide which I showed yesterday. Okay. So remember this slide? This person is a pensioner, so that was important. He's a pensioner. This is his yearly pension. Then he also receives a gift, and his expenses in the year are 280, and this is how we calculated. Some of us calculated his homes. Now, if you look at this chart here, this 40K, he used it in 6 months. It gets used in 6 months. Okay, the next 40K again gets used in 6 months. Okay. I hope you're all following, but the third 40K again, the orange, the yellow bar shows that it gets used in 6 months. So none of his pension lasts for more than a year. And if he is type U, basically a pensioner, there will be no homes obligation on this 40K, no homes obligation on this 40K, no homes obligation on each 40K, because none of them last for a year. And then he received 300,000 as a gift from his son. Again, this will have its own homes year, and because it is going to get used in 2 months' time for his ziyarat expense, again, there will be no homes obligation on him. However, if he had chosen 2021 as his homes year, if he had a single homes date, then in that case, obviously there would be a homes obligation on him, and he would have to pay homes on that amount. So if you're a pensioner or if you belong to type U, you can set up a homes year for each individual burst of income that you get, and as a result, your homes obligation will significantly or can significantly drop. Okay, let me quickly get back to today's section where we stopped. Okay, so now when you're calculating so the first step was to calculate your homes year, and once you have calculated your homes year, so if you're a housewife, if you're a student, and so on, you will figure out your homes type based on your income and your skill set and your profession, how you are making a living. Figuring out your next step would be figuring out your homeable income. Now this is detailed and it has a lot of furu'at, a lot of subset of rules, but the important thing to consider that it will include, number one, cash that is subject to homes, property, valuables that was purchased from homeable money. Okay, so you had salary, you're drawing salary, and then you invested that, or in property, in valuables, uh, and the money used was khumsable. So at the end of the year, that is still counted as your khumsable income. And based on whether you purchased the valuable from khumsable money or from Muhammad's money, again the rulings will change as to what mm, what amount will be, and when the purchase was made, before the Khums date or after the Khums date, the rulings will be different on based in this manner. When you're paying Khums, are you going to calculate its market value and pay Khums, or are you going to calculate its uh, buying price, the buying price when you bought it, and calculate Khums based on that? So there are going to be consequences based on which money you're using. So again, this is important when you're making a purchase. One of the things to note down, or one of the things to know in certain cases, is which money did you use? Did you use Muhammad's money to make this purchase? Did you use Khumsable money to make this purchase? And secondly, if you were using Khumsable money, had the Khums year passed on it, or the Khums year had not kicked in yet? So all of these will have consequences in terms of how you are going to calculate your Khumsable income, the amount that is liable to Khums. Okay. Other things to note that will again affect your Khums calculation is why that item was purchased. Did you buy it because it was your current year's need? If it was a need of your current year, then it might not be liable to Khums. It is Khumsable income, but then because it was spent on your expense, it is Khums will not apply to it. Or you bought it for your future need. You're foreseeing an expense at 3 years down the road, and then you're buying it right now. Are you buying it to make profit later on by selling it? You buy a house with the intention of selling it 2 years down the road, or you're buying a house with the intent of renting it. Are you buying it as a rental property? Again, the intention why the house was bought will determine whether Khums will apply to it. So let me give an example. So if you buy a piece of land uh, from Muhammad's money, okay, for rental purposes, and at the end of the year the price of the house doubles. Now there is 100% increase in its price. So this 100% is profit that you can make if you sell the house. But because the intention was to rent it out, and that is why the house was built, there is no Khums obligation at the end of the first year. There will be no Khums obligation at the end of the second year if you do not sell the house. Khums obligation will kick in only and only when you sell the house, and if there is profit made at that on that sale. Okay. However, if it was bought for trade purposes, meaning if you had bought it so that you would sell it later and save some money or make profit from it, then at the end of the very first year, because it was bought from Muhammad's money, the capital will be not liable to Khums. However, the appreciation, which is 100% now, you bought it for $100,000 and the worth now is $200,000. Even though you're not selling it, Khums will kick in. Okay, Khums will kick in, and you'll be liable to pay 20% of the appreciated value in Khums. And if you don't pay, then 20% of the appreciated value of the house will belong to the Imam, meaning the Imam will become partners with you in the house. And if the house is on rent, for example, then you will have to pay for like or if the house is generating any income or something like that, you'll have to compensate for that part as well to the Imam and the Sadat. Okay. So all of these are important considerations. Now, your Khumsable income is The three important components to your khumsable income. One is your liquid cash that you have, which is khumsable. The second is your principal asset, the principal value of the asset. Let me make it clear. The principal value of the asset is liable to khums if it was not if the principal was not muhammad's money. If the principal was khumsable money, then the principal value is going to be liable to khums. And number three, the appreciation now will be liable to khums separately. So in certain cases, your principal might be Muhammad, so there will be no khums on that, but any appreciation will be subject to khums. Okay, so sometimes you get inherited property and then you keep it for business purposes in certain, and the price rises, then that is an appreciation and it will be liable to khums. And if it was kept with the intent of or any in business in venture kept with for the purpose of profit by selling it later, you is subject to khums at the end of the first year, even if you don't sell it. So if you don't sell it, then partnership rules will kick in, and all of those details will need to be considered. Okay. The appreciation can be in different forms. Sometimes the actual value increases. Sometimes the item grows. For example, you have a farm and your herd of cattle, they grow in weight. So that is also an appreciation that needs to be factored in. Okay. Next is deductibles. Okay. I don't know why the screen. Is the screen sharing? I'm sorry, I didn't look at the message. Is the screen share active, brother? Let me share that one more time. Okay, Alhamdulillah, if people are following it, are you seeing it right now, the screen? Yes, okay. I hope. Okay, so Alhamdulillah, if it's working now, we are good. So let me look at the question and see if anyone needs to be addressed. So how much of a down payment of house is considered okay to pay versus a luxury payment? And homes for those who have mortgage. Okay, so if the house that you're buying is in line with your status, any down payment that you make will be okay. Okay, any down payment, any amount of down payment that you make, as long as the house is in line with your status, will be okay, and they will not be liable to homes. Mortgage has a lot of intricacies. I'm not going to address that right now. If there is a stock profit, but there is mortgage on the primary home, is homes difference of stock profit payable? Again, mortgage related. I will discuss it some other time, inshallah. Okay, question 3. Association doesn't allow multiple home state. Can please verify and give ruling reference? I can share the reference later on. But yes, Ayatul Sistani allows multiple for certain people, for pensioners and those who do not have a skill set. They can have multiple dates, That is the latest info that I have. If there is a new ruling after that, I'm not aware of that. But for pensioners and those who do not have uh, a skill set or a profession, they can use a single. They can use a multiple home states for each input. Okay. Now deductibles. What are things that you can deduct? You can deduct yours and your dependents' yearly living expense based on your status. Okay, so based on what your status is, your yearly living expenses. So sometimes you have to buy a house, it is in line with your status, and buying a house, whatever cost will incur will be your living expense. There is a recent ruling by Sistani where if you are taking a loan for your primary house, which is your living expense, then there is a ruling on you can factor in the loan, and as long as your profit is, as long as your savings is less than the loan that you have on your house, you will not be liable to pay homes. And there are other rulings. I'm not going to get into that detail because it has a lot of areas that needs to be addressed, and giving one statement here will only create more confusion. So I'm not going to address that right now. Haram expenses, israf, cannot be deducted. Okay, even a trip to the ziyarat trip, if it is in line with your status and shan, that is a deductible expense. But if it is if it is not in line with your status, if it's a lavish expense and people will consider it as israf, then you will not be liable to deduct that as an expense. Okay. Loans that you take will not be liable to homes. The loans that you take for living expense will not be liable to homes. And even if you've taken a loan and bought property from it, as long as you have not paid back any of the loans, there will be no homes obligation on it. But the moment you start paying off your loans and you have paid 10% of your loan, 20% of the loan, then homes obligations will kick in. So if I use $20,000 and buy an investment property, and the investment property doubles, again, as long as I've not made any loan payments, there will be no homes obligation. Business expenses are again another deductibles that you can use. Some get converted into assets, some get converted into assets, some don't get converted into assets, like desks, computers. They get converted into, like, you buy desks and computers, so they are a business expense that you're using to make money. Some don't get converted into assets, like paints and maintenance and salaries. They perish. Then you have business losses. They are also considered deductibles, and those who are running businesses, they will they can come up with a list of losses. So money gets stolen, damages, accidents, and things like that. Then we have depreciation. Then you have depreciation, and so your car depreciates, your business property drops down in value. Your stocks depreciate in value. So you paid homes on your stocks, and then next year the loss in you lose value on the home. So that is a depreciation in the value, and you can factor that in for when calculating homes. Now again, there are some more detailed rulings here. So I have one stock which appreciates and then one stock that depreciates, then I can lump them together and then see my my depreciation and then factor and then compensate for my profits with my losses. And sometimes you can't, sometimes you're allowed to compensate from one loss from another business, and sometimes in certain cases it is possible that you might have to treat these businesses independently. Now we're coming to the end of the session. Because all of these individual topics are detailed topics and need a rigorous sessions. which inshallah we can plan some other time in detail. The intent of purchase is important. It will affect your home's calculations. Did you buy it for your current year's need? Did you buy it for your future need? Did you buy it for business purposes, meaning profiting by selling it later? And did you buy it to rent it out? Each of these will have different rulings. What is the source of purchase? Was it homesable income? Was it homes free money? Or Muhammad's income? Was it inherited money, for example? Or was it money that you'd already paid homes on? Was it previous savings on which homes was due, but you did not pay homes on it? So you were saving money, you did not know the rulings, and after 5 years you decide to invest it, and you invested it. What am I going to do right now? Right? So some of us could be in such a mess. Loans. So your source of income was loan. So how are you repaying the loan? Okay, are you paying the loan from current year's income, or are you paying the loan, for example, from inherited money? Are you paying it from current year income, or you're making it from inherited income? This is all going to make a difference. And then another important thing to note as you make your calculation is your calculations of your homesable income going to be based on your current market value of the asset, or is it going to be based on your buying price? Again, and there can be differences. In certain cases, it will be based on the buying price, and in certain cases, it is going to be on the current market value. So, or is it going to be on the peak price over the years in case of negligence and in case of a person being a ghasib? Okay, then he might have to look at the peak price over the years and make that payment. So I will stop here for now, and we'll see if we have questions. We have 10 minutes left, so I'll try to address the questions. And would taxes paid to state or federal government be part of the compensable income? Well, if it is, then definitely it is an expense that you have to make. Then this will be part of your mauna for that year. It's an expense, it's like a utility bill that you're paying, and if you don't pay, you will be penalized. So taxes will be deducted as your living expense. So another important point to know that, for example, if you are in a contract where you're getting haram income, if the contract is batil, okay, if the contract is batil and the profits or your contract is interest based, and it is interest that qualifies as riba and it is haram. So I'm pointing it out again. So if you are in a contract and the contract is batil from an Islamic perspective, and you're not entitled to the money that you're receiving, then that money is not yours to begin with. It belongs to the other party or whoever it belongs to. Then you are not going to pay khums on that. You're not going to even use that money. You can't use that money, and that will not be part of your khumsable income. So important thing, your khumsable income is money that you own. You have to own that money, and it has to be a faida, it has to be a benefit, it has to be a profit. Okay. Is income from 401k at retirement khumsable? So income from 401k, if all of it is vested, if your 401k is vested, so it is considered a saving that you have made. Okay? It is not part of your living expense. It is a saving, and homes can apply to it at the end of the first year. Homes will kick in at the end of the first year. If you cannot pay at the end of the first year, or if there are consequences, then you are actually deferring the payment at a later date. Khums has kicked in, and it is possible that part of your investments are now jointly shared by the imam. And if you don't have the permission, and it is possible that Ayatollah Sistani people might have taken permission from them, and they would allow a deferred payment. In most cases, they do. The office never makes it difficult for the believers to fulfill their obligations. They give permission to defer payment, and then so in that case, at retirement, when you withdraw the money, you'll be liable to pay Khums on it right there and then, if Khums has already kicked in, except for the last year's income, for which you will have 1 year. There was a question yesterday on buying a house for 20K for your personal use, and then after 1 year, after the Khums date has passed, you sell it for 40K. So the price, you sell it for twice the price. Are you going to pay Khums on the entire or on the 20K? Well, according to Ayatollah Sistani, the Khums will be applicable on the appreciation given your Khums date arrives. So in the second year, you sell your house with a 20K profit on the house. The primary is Khums free. The secondary 20K will be liable to Khums if you do not spend it on your living expense in that fiscal year. So if you use that to buy another house as a primary house, then it will again be considered spent on your living expense, and there will be no Khums obligation at the end of the year. Okay, so let us wait for a minute or two for more questions, if there are any. One of the good practices would be to have a separate social security from government. Is the same as 401k. So for social security, you'll have to look at how social security works. If it is considered charity, for those who are not earning, then it will fall as it would be liable to Khums, but you'd fall under type U. It would be considered as pension or charity, things like that. So you will have the freedom of keeping every a separate Khums rate for each income, provided you do not have any other income to support yourself. One of the good practices, Khums practices, would be to have, well, obviously, those who are business people out there and have a good accounting sense would have realized by now that we need to set up an accounting system in a manner that it helps us calculate our Khums in easily at the end of the year. Just like you maintain your records to be able to pay your taxes, so you have separate forms and you have separate you have you even have an account. You hire an accountant to track all of your expenses so that you can calculate your tax easily. Similarly, in this case, we need to have some best practices and good bookkeeping. So for each investment that you make, each property that you buy, it is important that you have some record. You have a separate folder, a separate file for each property, which specifies which income was used to make this purchase, what was the intent to make this purchase, has the Khums been paid yet, or the Khums is being deferred. So that in case of death of the person, the inheritors, or in case of you yourself down the road, 10 years down the road, you're not going to remember which money was used to buy what. Okay, did I pay Khums on it? Did I not pay Khums on it? The inheritors would not know anything about that. So if there are records to show all of these, then it becomes quite easy for the inheritors to fulfill the Khums obligations that you have. Any more questions, please? So if there are no more questions, I will take this time to say goodbye to all of you and um, leave you in Allah's protection. May Allah help all of us fulfill this monetary ibadat with the sincerity and correctness. And may Allah protect all the believers and all the people of this dunya from this pandemic that we have. Inshallah, look, I'll answer the question in a minute. So may Allah protect all of us, and may Allah hasten the reappearance of our 12th Imam, inshallah, so that we can all uh, be supporting, inshallah, the establishment of the just government, inshallah. If there was one last question, if you can share that question, if it is easy to answer, I'll answer it. If one has a home that was bought for personal use, but after 5 years converted to rental property, and another house was purchased for personal use, what was the home's liability on the rental home? Uh, Good question. Um, Good question. So I can answer this right from the top of my head. So inshallah, I will leave that inshallah for some other time. Or you can contact, you can get my WhatsApp and you can set it on my WhatsApp, and I'll follow that inshallah. Jazakumullah everyone. Thank you for attending, and may Allah protect all of you. Wasallallahu ala Muhammadin wa ali Muhammad. Wassalamu alaikum wa rahmatullahi wa barakatuh.